Today, we're diving into fantastic news straight out of Taiwan. News that's got Nvidia and Broadcom investors grinning from ear to ear. Because when TSMC, the world's most important chipmaker, sneezes, the entire semiconductor world catches a cold. But this time, TSMC isn't sneezing. It's sprinting. The powerhouse behind the AI boom. If you've ever wondered where the chips inside Nvidia's powerful GPUs or Broadcom's custom silicon are made, the answer almost always leads to one name, Taiwan Semiconductor Manufacturing Company, or TSMC. They are the invisible engine behind today's AI revolution. From data centers to your smartphone, if it's cutting-edge silicon, chances are it came from one of TSMC's fabs. And that's why any update from this company isn't just an earnings report. It's a barometer for the entire tech industry. TSMC's September surprise. So, what just happened? TSMC's latest monthly data dropped, and it was massive. September sales soared 31.4% year over year, hitting 330.98 billion NTD. Add in July and August, and Q3 revenue hit 989.92 billion NTD, smashing past management's own guidance of 957 billion NTD. That's not just a beat. That's a beat with conviction. Analysts had speculated that some orders might have been pulled forward from September, but no, demand held strong. That means Nvidia, Broadcom, and other AI chipmakers kept ordering aggressively, showing the AI demand wave isn't slowing down. The AI chain reaction. The last few months have been a frenzy of AI chip alliances. OpenAI's massive $10 billion deal with Broadcom for custom silicon. Nvidia's new architecture ramp-ups to feed hyperscaler hunger. Cloud giants like Microsoft, Amazon, and Google doubling down on data center AI infrastructure. All that spending eventually ends up right back at TSMC's doorstep. So when TSMC's sales spike, it's a direct reflection of how strong that AI hardware pipeline really is. What it means for investors. Let's unpack the ripple effect. Nvidia. Analysts expect Nvidia sales to grow 55% year over year for each of the next 2 quarters. Even with competition brewing, AI GPUs remain the crown jewel. Broadcom. Broadcom, meanwhile, is having a breakout year. With its $10 billion custom AI chip deal with OpenAI set to kick in next year, revenue growth could accelerate to 33% in 2026. That's on top of its existing data center and networking dominance. The valuation problem. But, and there's always a but in investing, the market already knows. Nvidia stock, up roughly 40% this year, trading at 42x forward earnings. Broadcom stock, up about the same, trading at an even steeper 49x forward earnings. Those are nosebleed valuations. At these levels, any earnings miss, even a small one, could send shares tumbling. The smarter play. Look at TSMC itself. Here's the twist. While Nvidia and Broadcom are the shiny faces of AI, TSMC is the quiet powerhouse behind them. And unlike its clients, TSMC trades at just 29x forward earnings, a relative bargain considering its market dominance and diversified customer base. Even if growth slows modestly later this year, TSMC still looks like the smarter, lower risk way to ride the AI megatrend. You're not betting on one chip designer, you're owning the global AI supply chain itself. The bigger picture. AI's industrial backbone. This surge in semiconductor demand isn't just about GPUs or custom AI chips. It's about the infrastructure of the next industrial revolution. As Amazon's Jeff Bezos once said, it's hard to overstate the impact. Cathie Wood calls AI an $80 trillion opportunity by 2030. That's the equivalent of 18 Nvidias or 33 Amazons. And nearly all of that future innovation, from self-driving cars to intelligent cloud networks, runs through one choke point, the semiconductor supply chain led by TSMC. Takeaways for investors. TSMC's blowout September confirms continued AI chip momentum. Nvidia and Broadcom's growth looks strong, but expectations are high as sky. Valuation risk makes them vulnerable to short-term corrections. TSMC remains the backbone and potentially the best way to invest in AI hardware without overpaying. Closing thoughts. At PyUncut, we like to say, follow the flow of innovation, not just the hype. And right now, that flow runs through silicon wafers in Taiwan. As TSMC gears up to release its Q3 earnings and Q4 outlook on October 16th, every investor in the AI ecosystem will be watching closely. Because this isn't just about one company. It's about the entire future of computing and who controls the keys to that kingdom. PyUncut Insight. If you believe AI is the next industrial revolution, owning TSMC is like owning the factories that built the internet. Quiet, powerful, indispensable. Stay tuned to PyUncut for more deep dives on AI, tech, and markets that move the world.